Good afternoon. Thanks so much for tuning in. This is, well, ET Now You Know. And let's take a look at how the markets are looking right now. We're in cruise mode, seemingly, and it's been quite a busy Friday, and it's not over yet. So you had the start with the Zomato listing, and what a listing it was. A lot of investors that managed to get an allotment in that IPO being handsomely rewarded, with the stock gaining handsomely in trade in the first day of trade itself, becoming one of India's most valuable companies. But you also had the update from the Supreme Court on the AGR dues case, where it has thrown out the plea by telecom companies to recalculate those dues. Vodafone Idea being smacked pretty hard in trade. But all told, if you look at it, metal counters look reasonably good. You have banks that are doing reasonably well, up as much as 0.7%. And you have IT also that's gaining about 0.4% as a pack. Pharma is up about 0.2% or so, and it's looking reasonably good. Some of those PSU banks though, and IndusInd Bank perhaps also to a certain extent, bore the brunt of that hit that Vodafone Idea took. We'll of course have to wait and see how that pans out. But speaking about metals, one counter that is in focus and it's doing quite well as well is Hindustan Zinc. On the back of its earnings, it's posted a lustrous Q1, and that's largely on account of the price strength of the underlying metal. We're joined now by Arun Misra, the Chief Executive Officer of Hindustan Zinc. Thank you so much, Mr. Misra, for joining in. Now, the surge of zinc prices has certainly supported earnings in the quarter gone by, and despite the drop in volumes, you've managed to record quite a bit of gains. Zinc is now close to $3,000 a ton. The question is that sustainable? What are the cues that you're getting from the global markets?
Yeah, it had crossed 3,000 also in between, and then it came down because of people's anticipation that China would release a lot of metal into the market. But then again, it was followed by power cuts in South China districts and causing a lot of smelter outputs to go out. But on the supply side, a lot of mines in Peru and other countries have started operating. So as I look forward, I think my prediction last time also came quite well and good. And I think that it should be within 2850 to 2950 hover around and keep adjusting itself on the demand supply situation. No big surprises of moving up, or neither it would crash anywhere the way it had done last year, same quarter.
Mr. Misra, after staying below $1,000 per ton for the last few quarters, COP has gone up above $1,050 once again. What sort of input cost inflation have you seen that has moved your costs higher? And could we go back to the sub $1,000 that you had guided for?
So our guidance remains same as far as cost is concerned. And when we made the plan for the year, we did anticipate a rise in prices in quarter one, but we were expecting control the prices in quarter three and quarter four to bring it down to less than $1,000 again. So that is the overall plan. And as I can see now, yes, there is an input pressure on the prices that we have. Especially, coal prices are very high, and it is impacting on the met coke prices as well. Steel prices are high, cement prices are high. So it is also impacting other consumables and chemicals for the operations. But we are also taking more aggressive measures on the consumption side. We have started revamping our turbines in our power plants to reduce specific consumption of coal. And we have already completed one turbine this month, and we will be doing 2 more turbines subsequently. So by quarter 2, we should be getting a good quarter 2 end or quarter 3, mid of quarter 3. We should have a good handle over the specific consumption of coal. At the same time, we are making modifications in our power plant so that it is able to consume more and more high-gas, cheaper domestic coal compared to the imported coal that we consume. We have increased our domestic coal consumption from 20% of last year to about 30% rightly in the first quarter itself. And we want to increase it further so that without affecting environmental conditions, we are able to consume cheaper and high-gas coal, so that our input prices, which is mainly determined by the cost of power, that is controlled.
You postponed your 1.2 million ton volume target on account of the second wave of the pandemic, which understandably was quite disruptive. But what recovery have you seen post the ebbing of the second wave?
So if you look at this, in this year, first quarter, in spite of second wave, we have done 236,000 tons of metal, which is up 17% from same quarter last year. So we are well set, and we never had that good as a quarter one numbers, if the quarter one numbers are concerned. Fantastic numbers are volume wise as well, both in ore production as well as, ore production is 15% up. And we are continuing this quarter. We did 25 kilometers of development, which is also one of the highest ever in spite of the COVID. So this gives us good footing to go forward. Every quarter, our target is to do better than same quarter of last year. And I'm sure we will not be far off from achieving 300,000 tons a quarter, which is actual target of achieving 1.2 million tons.
Mr. Misra, you have a Kpex target of $100 million for the current financial year. But explain to us how that is going to be deployed and where are you adding capacity?
So this year we had earmarked about $200 million for sustenance capex, about $100 million for growth capex. These are mostly for finishing of items of $1.2 million project, as well as some of the items which are more on the balancing side. As we finish the 1.2, some of the structural adjustments have to be done in capacities or more environmental friendly measures to be taken in the plants and all that. So no significant growth projects this year, but we are on the drawing board for 1.35 million ton per annum project, and we should be finishing our design by end of this year. Also, it requires a lot of exploration to justify that we have enough of reserve to mine if we want to produce 1.35 million ton. So that is also I'm taking 1 year time, and by next year we'll come back to you with a firm plan and capex being apportioned for 1.35 million ton. At the same time, we are working on the 300,000 tons of standalone coastal smelter project in Gujarat. We have gone through the environmental clearance process right now. We are in the middle of it. Once that is done, we will seek board approval and start that project of 300,000 ton coast-based smelter project. So these are all the growth. And also we have a fertilizer project. We are very close to announcing the project commencement anytime soon. So all that taken together, we are on the path again to relaunch many of the growth projects.
Mr. Misra, you've anyway been a cash-rich company, and it seems this commodity boom and the rise in prices of the underlying commodity have only shored up that cash reserve. How do you plan to utilize it in terms of the plans for dividends or Kpex?
So we have a dividend policy, and I'm not going to make a bid. That's for the board to decide, and for the dividend and the timing of it. I'm sure when the time is right, the dividend will be announced. At the same time, we are all looking at mostly on the growth projects, which is for 1.35 million ton, and we are 300,000 ton project. And my entire vision is also to go beyond 1.35 million ton and look at further opportunities. And I am sure the way government is going ahead with auctioning of mines, and you must have read in the news recently, Rajasthan government will also look at auctioning of more and more mines inside Rajasthan. I can see a very good prospect for us picking up a few lead zinc mines in Rajasthan whenever they are auctioned, and that will add to our kitty, and we should keep our money reserved for that.
Mr. Misra, thank you so much for joining in and taking the time speaking to ET Now. We look forward to speaking to you once again very soon.